Hey everyone, in this Friday episode of Crypto Corner we are doing a recap of the top news and events that affect the crypto markets. This is episode 569 of your favorite video podcast where we discuss everything crypto related to help you navigate safely in the cryptoverse. So take a seat, grab a snack and let's begin. Alright, well, starting with today's news first, Coinbase was fined in New York for not adequately checking customers. Coinbase, the biggest US-based exchange, is ordered to pay a $50 million fine to the New York State Department of Financial Services to settle charges that it let users open accounts without conducting sufficient background checks. The KYC program was deemed immature and inadequate by the financial regulators, who also claimed that the crypto exchange's policies violated anti-money laundering laws. The settlement will also require Coinbase to invest $50 million over the next 2 years to bolster its compliance program. The SEC questions Binance US deal for Voyager digital assets. The US Securities and Exchange Commission has filed a limited objection to the Binance US exchange proposed $1 billion purchase of the assets of bankrupt crypto lender Voyager Digital. In its filing, the SEC questioned the adequacy of the information in their disclosure statement by Binance US, specifically details on the ability of the crypto exchange to consummate a transaction of this magnitude, as well as how Binance US intends to secure customer assets, and details on how Binance US would rebalance its cryptocurrency portfolio. In other news, Celsius Network wins control over customers' deposits in their Earn products. This unfortunately is not good news for users. Here's why. A federal judge ruled that Celsius Network customers who had interest-bearing accounts on the platform had turned over control of their assets to the bankrupt crypto lender, meaning the deposits are part of the company's bankruptcy estate. U.S. bankruptcy judge Martin Glenn said in a court order on Wednesday that Celsius's terms of service made it clear that it took possession of crypto assets deposited into its Earn product, dealing a blow to customers who were hoping to recoup their deposits. Celsius held around $4.2 billion in various cryptocurrencies in Earn as of last July, including $23 million in stablecoins. The UK crypto regulation is advancing. The UK National Crime Agency is assembling a crypto cell to focus on crimes involving digital assets. The unit will be dedicated to a proactive cryptocurrency remit with the right tools and capabilities to target UK-based subjects, according to a job advert posted on the government's website. The UK Financial Conduct Authority found that crypto was the top sector for financial scam alerts between March 2021 and April 2022. The FCA opened 432 crypto-related scam cases during that period. Solana had a very rough year throughout 2022. After reaching its all-time high of $259 back in 2021, the cryptocurrency has lost it all by the end of 2022, dropping by 95%. Like many other cryptocurrencies, Solana has been impacted by the ongoing crypto winter. However, the collapse of the FTX cryptocurrency exchange has had a particularly detrimental effect on the value of Solana. When the FTX platform collapsed, investors sold off their Solana holdings out of fear that the cryptocurrency might have connections with the failed exchange, and its price hasn't been able to recover. Moreover, two of the most popular NFT projects built on Solana are now in the process of moving over to Ethereum and Polygon, another big slap in the face of all Solana holders. Is Solana a dying project? Watch my next video to find out. I'm doing a deep dive in the rise and fall of Solana. Make sure you're subscribed. There was one piece of good news for Solana investors though. A Shiba Inu themed BONK token is yielding nearly 1000% for Solana liquidity providers. The token, which was issued on the 25th of December, has returned more than 2000% to traders in the past week. The token was airdropped to Solana NFT communities and creators, which led to quick hype and trading volumes for the token. Early investors aren't the only ones gaining, however. Liquidity pools on Solana-based decentralized exchanges exchanges such as Orca have attracted over $20 million in volume for trading pairs involving Bonk. The hype is fading away though. Today the token is down more than 50% after the crazy rally, something that was expected. It's how it always happens. An even bigger correction is very likely. Is another Bitcoin sell-off coming? A total of 20,000 Bitcoin was transferred to Coinbase recently. The exchange inflows is an indicator that measures the total amount of Bitcoin currently being transferred to an exchange, which in this case is Coinbase. Since one of the main reasons holders deposit to exchanges is for selling related purposes, this trend can have a bearish implication for the price of crypto. This could be due to the recent comments from the Federal Reserve about not easing down the interest rates hikes. Another hawkish hike in interest rates will inevitably bring stocks and crypto down, so watch out for that. This week also brings bad news for the biggest Bitcoin mining farm, Core Scientific, which announced that it will shut down 37,000 mining rigs that it hosts for Celsius mining. Core Scientific turned the machines off after moving to reject its contract to host the equipment. The two firms have been engaged in litigation over the 2020 deal, which Core Scientific says it's costing them $2 million in revenue per month. Both companies are in Chapter 11 bankruptcy. Celsius Mining filed last July, along with its parent company Celsius Network, and Core Scientific filed theirs just a few weeks ago. And lastly, Sam Bankman-Fried pleaded not guilty to fraud and conspiracy charges. This was one of the top headlines of the week, and it's from 2 days ago. Bankman-Fried, who is facing 8 criminal charges, including wire fraud and campaign finance violations, pleaded not guilty to all charges via his lawyer at a hearing in federal court in New York. The former CEO of the now bankrupt crypto exchange FTX made his second appearance in the courthouse on Tuesday. At his first appearance last week, he was released on a $250 million bond and shortly after flew back to his parents' home in California. His not guilty plea was expected according to an earlier report in the Wall Street Journal. He will try to shift blame to his staff, as he already has claimed many times that he wasn't keeping track on most of the internal operations. Not sure how this will stand in court, especially after seemingly taking full responsibility for the demise of FTX in his early tweets. The court case will surely be the most high-profile case in crypto, possibly bigger than the SEC versus Ripple, which is still ongoing. Keep your crypto safe with the best cold storage on the market, Keystone Wallet, air-gapped device with top-tier security. Alright, well, this was everything for today's episode, guys. I hope these news are helping, and I'm trying to keep this short. Make sure that you leave comments if you have any questions or if there's any topics that you want me to cover. Also, show your support by leaving a like, and make sure that you check out the links in the description below, where I drop the links to all of the crypto services that I'm personally using and that I recommend to you. And while you're here, just pick another one of my videos, and I'm gonna see you in the next one.